Hi everyone, welcome to the channel. My name is Philippe Marie-Jean Robert and I am the founder of Kwajami Financial, an independent firm that provides both financial planning and investment management services to Ontario residents. If you are a returning subscriber, welcome back. If you are new to the channel and would like to learn more about financial planning and investment, please click the subscribe button and the notification bell so you don't miss any upcoming videos. This will also make a huge difference in helping the channel succeed. Seeking investment advice is arguably the right thing to do if you have limited investment knowledge or do not have the time for personal or professional reasons to manage your portfolio on a daily basis, or simply choose for any reasons not to manage your investments on your own. Many investors declare themselves as self directed investors. So, how about you? Are you a self directed investor? I would be curious. Let me know in the comments down below. I would argue that most investors, and in my opinion, the vast majority of investors, would greatly benefit from working with a trusted advisor. But the question is, how much value does working with a financial advisor really bring? In today's video, I will attempt to provide several elements to answer this important question. Let's get started. Does working with a financial advisor bring any value? And if so, can we quantify the value provided? One study, the gamma factor on the value of financial advice, conducted by Claude Montmarket and Nathalie Vienno-Brio in 2016, attempted to answer that very question. The study compared the net worth of two groups of investors: those who received continuous advice over time and those who did not receive any advice. The results show that investors who made the decision to work with a trusted advisor ended up with a substantially higher net worth over time. Indeed, investors who worked with a trusted advisor had a net worth almost 4 times higher after 15 years or more when compared to investors who did not receive any advice. Several factors can explain these results, but I would like to underline one factor that I believe played a significant role. Working with an advisor clearly encouraged investors to not just save more, but also invest more of their savings in investments other than cash or cash equivalent. This cannot be underestimated because we know that when it comes to investing, time is our best ally. In this instance, investors who received advice tended to invest more in financial markets over a longer period. This provides a rationale for why building a solid financial plan is so important. Such a plan will typically detail how much you, as an investor, will need to invest over time to meet your goals. It is essentially the roadmap to your destination. And so, if you have a detailed map that shows you the most effective path forward, you are unlikely to get lost or take an unnecessary detour. There are also additional benefits that working with a trusted advisor provides, and they cannot be overlooked. As discussed in 2 of my previous videos, behavioral biases can lead to suboptimal portfolios and lower risk-adjusted returns. I encourage you to watch those 2 videos if you have not done so already. And so, working with an advisor will help you manage and moderate your behavioral biases and avoid costly investment mistakes. The fear of loss, also known as panic selling, can lead investors to sell at the worst possible time. Another example is herding, which is following what everyone else is doing. Unfortunately, herding tends to lead investors to buy high and sell low, clearly not a recipe for success. Also, studies show that investors generally lack the patience and the longer term vision to stay invested for much longer than 4 years. Jumping in and out of the market or specific investments every 6 months or so is not something that I would recommend because it is extremely difficult to perfectly time the market, and it is even harder, or should I say, virtually impossible to do it consistently over time. Successful investors invest for the long run and remain invested even during periods of increased market volatility. Successful investors make rational decisions independently of external factors. It is very easy to get distracted by all the noise generated by headlines and financial news in general. An advisor can help you filter out that noise and, more importantly, help you stick to your investment plan. A trusted advisor will place your interest first and provide you with the peace of mind you deserve as an investor. I hope you have found this video informative. I encourage you to consider working with a qualified advisor if you feel you need help. As always, don't forget to like and subscribe. Thanks for watching and see you in the next video.